Federal Reserve Chair Jerome Powell's recent speech at the Jackson Hole Economic Symposium has sparked significant optimism in financial markets, leading to what is being called the everything rally. Powell's remarks suggested a shift towards a more dovish monetary policy, indicating the possibility of a future interest rate cut to support job creation, despite current inflation concerns. While Powell did not confirm a rate cut at the upcoming Federal Open Market Committee (FOMC) meeting in September, his comments have led investors to anticipate a 25 basis point reduction, with 86% of interest rate traders expecting this outcome. The market has reacted positively, with major indices such as the S&P 500, Dow Jones Industrial Average, and Nasdaq experiencing substantial gains. The S&P 500, for example, rose 1.55% to new record highs, and the Dow climbed nearly 900 points. This rally has particularly benefited sectors like home construction, small caps, banks, and cyclicals. Specific stocks, such as Open Door Technologies, Inc., have surged significantly due to the prospect of lower interest rates, potentially revitalizing the housing market. Analysts note that this strategic pivot by Powell aims to maintain loose financial conditions to bolster economic growth, despite elevated core inflation and labor market challenges. However, the sustainability of this rally remains uncertain, as it depends on upcoming economic data and the Fed's ability to balance inflation and employment objectives. Investors remain vigilant of potential inflationary pressures and are closely monitoring key economic indicators due this week, including consumer confidence and personal consumption expenditures, PCE inflation figures. In this environment, market analysts have identified several stocks with promising technical setups, such as eClerx Services, Sagar Cements, and Indraprastha Gas Limited, which exhibit strong bullish indicators. These insights provide traders with actionable strategies amid the current market optimism driven by macroeconomic cues from the Federal Reserve.
Bitcoin has surged past the $112,000 mark, marking a significant milestone in the cryptocurrency market. This increase has been attributed to several factors, including heightened institutional interest, anticipation of future Bitcoin halving events, and macroeconomic uncertainties that drive investors towards Bitcoin as a potential hedge against inflation. Major platforms like Binance have reported Bitcoin trading at this new high, signaling a renewed wave of optimism in the digital asset space. The surge underscores Bitcoin's growing role as a critical asset in the global financial landscape, attracting both seasoned investors and newcomers. The ripple effect of Bitcoin's price surge is evident across the broader cryptocurrency market. Historically, a strong rally in Bitcoin often leads to gains in altcoins, as investors reallocate profits from Bitcoin into other cryptocurrencies, potentially triggering an altcoin season. However, this dynamic also comes with the risk of increased volatility, as corrections in Bitcoin's price can lead to sharper declines in altcoins. For investors, this period of rapid growth presents both opportunities and challenges, emphasizing the importance of thorough research, risk management, and strategic portfolio diversification to navigate the volatile market effectively.
The main financial event highlighted in this news is the continued strong demand for beef in the U.S. despite record-high retail prices. According to USDA data, the all-fresh retail beef demand index has reached its highest level in over 25 years, defying typical expectations of price elasticity, where higher prices usually dampen demand. This trend is largely attributed to an increased consumer focus on dietary protein, improved perceptions of beef's health benefits, and the availability of high-quality cuts in grocery stores. CoBank's research suggests that the demand for beef remains robust, with retail per capita consumption projected to reach £60 in 2025. Key entities involved include the U.S. Department of Agriculture, USDA, which provides data on beef demand and cattle inventory, and CoBank, an agricultural credit institution that offers insights into the factors driving beef demand. The beef industry has made significant strides in improving product quality, with 95% of U.S. beef now grading choice or higher, enhancing consumer satisfaction. Additionally, the USDA's mid-year cattle inventory report reveals a historically low cattle count, indicating that tight supplies will likely keep beef prices elevated through at least 2026. The impact of this trend is multifaceted. On one hand, the beef industry's focus on quality and consumer health trends has bolstered demand, providing resilience against price hikes. On the other hand, persistent high prices could eventually influence consumer behavior if broader economic conditions change. For now, the beef market remains a strong performer, with implications for retail pricing strategies and potential challenges for consumers facing broader inflationary pressures.
Megamatrix's recent decision to adopt Athena's ENA governance token as its primary digital asset treasury reserve marks a significant development in corporate treasury management. As a NASDAQ-listed entity, Megamatrix's move underscores a strategic pivot towards embracing decentralized finance, DeFi, and stablecoin governance, reflecting a broader trend of traditional companies integrating digital assets into their financial operations. This decision is driven by the impressive growth of Athena's USDE stablecoin and highlights the potential for governance tokens to offer both strategic influence and financial diversification. The adoption of ENA allows Megamatrix to actively participate in the governance of Athena's rapidly expanding stablecoin protocol. This strategic alignment not only positions the company at the forefront of stablecoin innovation, but also provides potential for treasury growth as Athena's ecosystem develops. By diversifying its digital asset holdings with a governance token, Megamatrix sets a precedent for how public companies might engage with decentralized autonomous organizations, DAOs, and benefit from their growth and innovation. However, the volatility inherent in digital assets requires a cautious approach, as Megamatrix plans to purchase ENA tokens based on prevailing market conditions, demonstrating a commitment to responsible financial management. This move by Megamatrix could have significant implications for the broader stablecoin market, lending credibility to decentralized stablecoins and potentially encouraging other traditional companies to explore similar integrations. As governance tokens gain importance in shaping the future of these protocols, Megamatrix's strategic adoption of ENA might accelerate innovation in stablecoin design and governance models, paving the way for more robust and decentralized financial infrastructures.
Rocket Lab Corp. (RKLB) shares surged by 10.82% to $49.18, following the announcement of expanded U.S. investments aimed at increasing semiconductor manufacturing capacity and strengthening the supply chain for space-grade solar cells and electro-optical sensors. This strategic move is supported by a $23.9 million award under the CHIPS and Science Act, highlighting the U.S. government's commitment to fostering domestic innovation and maintaining a competitive edge in space technology. The investment is expected to enhance Rocket Lab's capabilities in national security space missions, further solidifying its role as a key player in the defense sector. The company's recent acquisition of Geost, a firm specializing in electro-optical and infrared payload development, complements its investment strategy and is anticipated to bolster its standing as a prime contractor for next-generation defense initiatives. Additionally, Rocket Lab successfully completed its 70th Electron mission, marking its 12th launch of 2025, which underscores the company's rapid operational pace and reliability in space launches. This achievement, coupled with the nearing completion of Launch Complex 3, positions Rocket Lab for continued growth and influence in the aerospace industry. The market's positive response reflects investor confidence in Rocket Lab's strategic direction and its potential to capitalize on emerging opportunities in the space and defense markets.
The recent acquisition of the Port of Stewart bulk terminal by a partnership involving the Neskaa and Talton nations alongside Aero Transportation Systems marks a significant development in British Columbia's economic landscape. The transaction, which is expected to finalize in the coming months, sees the creation of a new entity, Portland Canal Holdings Limited Partnership. This strategic move aims to bolster the transport of critical minerals like copper concentrate from mines within the Neskaa and Talton territories, aligning with broader goals of economic reconciliation and self-determination for indigenous communities. The partnership, backed by a $5 million provincial grant, is positioned to enhance revenue generation and stimulate economic growth both locally and beyond. The acquisition underscores the increasing importance of indigenous participation in key economic sectors, particularly in regions rich in natural resources. By integrating the terminal with regional trucking operations, the partnership aims to create an efficient supply chain, potentially increasing the terminal's current operation, which handles handles about 260,000 tons of copper and gold concentrate annually at half its rated capacity. This initiative not only supports the flow of critical minerals, but also aligns with British Columbia's vision of becoming a pivotal economic engine for Canada, as highlighted by BC Premier David Eby. This development could potentially drive job creation and foster new business opportunities, reinforcing the critical role of Indigenous partnerships in the province's economic strategy.
Tilray Brands, TLRY, experienced a notable 20% surge in its stock price following a revised price target from Jefferies, which increased its target from $1.50 to $2, while maintaining a buy rating. This adjustment comes amid U.S. President Donald Trump's consideration of rescheduling marijuana from Schedule 1 to Schedule 3, a move that could significantly broaden access and regulatory conditions for cannabis in the U.S. Jefferies highlighted Tilray's strong brand, scale, and financial stability as key factors positioning it to capitalize on this potential regulatory shift. Analyst Kamil Gajrawala described the potential reclassification as not legalization, but progress, indicating a substantial shift in the federal stance that could benefit companies like Tilray. The market's reaction was further amplified by increased retail investor activity, with a 65% spike in message volume on StockTwits, maintaining a bullish sentiment. Despite the recent uptick, Tilray's stock has seen a modest 3% gain year-to-date, but remains down by over 26% over the past year. The company's CEO, Irwin Simon, emphasized investor confidence in Tilray's global platform and its ability to leverage a more favorable regulatory environment. This development also coincides with Tilray's efforts to regain compliance with Nasdaq's listing standards, highlighting the complex interplay between regulatory changes and corporate strategy in the cannabis sector.
Federal Reserve Chair Jerome Powell's recent remarks have significantly influenced market dynamics, as he hinted at potential interest rate cuts in September 2025. This announcement led to a surge in major stock indices, with the Dow Jones Industrial Average, S&P 500, and Nasdaq Composite all experiencing notable gains. The tech sector, in particular, saw substantial growth, driven by Powell's indication of a shift in the balance of risks concerning the Fed's dual mandate of full employment and stable prices. The probability of a quarter-point rate cut increased to 83%, according to the CME Group's FedWatch tool, reflecting heightened market expectations. In this context, hedge funds and investors are eyeing long-term stock opportunities, with a focus on companies like Shopify Inc. and Verizon Communications Inc. Shopify reported impressive growth in its gross merchandise volume, marking its strongest performance in over 3 years, while Verizon announced new international connectivity plans for its prepaid customers. These developments highlight strategic moves by these companies to capitalize on market trends and consumer demands. As investors seek to align with top hedge fund picks, the performance and strategic initiatives of these firms are being closely monitored for their potential to deliver substantial returns over the next 5 years.
The Federal Home Loan Bank of San Francisco has announced the allocation of $10 million in grants through its 2025 Middle Income Down Payment Assistance Program. This initiative, now in its third year, aims to support middle-income first-time homebuyers in Arizona, California, and Nevada by providing matching grants of up to $50,000. The program is designed to help those earning between 80% and 140% of the area median income, addressing the financial challenges posed by high housing costs in these regions. This year's funding was quickly exhausted within 2 weeks of its launch, underscoring the significant demand for such assistance. The program's success highlights the ongoing challenges faced by middle-income earners in high-cost housing markets, where the dream of homeownership can be elusive. By partnering with 55 member financial institutions, FHL Bank San Francisco is making strides to mitigate these barriers, having provided $40 million in assistance since the program's inception in 2023. This effort not only supports individual homebuyers, but also contributes to the broader economic vitality of the communities served, reinforcing the bank's commitment to fostering affordable homeownership and revitalizing neighborhoods.
Riot Platforms, Inc., NASDAQ, Riot, a digital infrastructure and Bitcoin mining company, has recently garnered positive attention from Wall Street analysts. On August 7th, Jones Research upgraded Riot Platforms to a buy rating with an $18 price target, reflecting optimism about the company's long-term prospects. Similarly, Cantor Fitzgerald's Brett Knobloch reaffirmed a buy rating with a higher price target of $24 on August 6th. Analysts' bullish sentiment is underscored by a median price target of $12.27, suggesting a potential upside of 44.66% from current levels. Riot Platforms focuses on becoming a leading vertically integrated Bitcoin mining company, emphasizing low-cost production, large-scale operations, and a robust balance sheet. The company's operations span Central Texas, Kentucky, and Colorado. While the outlook for Riot Platforms appears promising, some analysts suggest that certain AI stocks may offer higher returns with reduced downside risk compared to Riot. Despite this, the recent upgrades indicate growing confidence in Riot's strategic position within the cryptocurrency sector, potentially influencing investor sentiment and stock performance.